My name is David Erfle, and I am the junior miner Junky. I started out in this business about 15 years ago, discovering it just on my computer, searching for something to invest in while the market was tanking, and discovered mining stocks and went, wow, look at this. These things are awesome. Look how much they go up when everything's going down. So I just have to also insert that this is the very first time I've ever given a presentation. So if I impress you, just act impressed, and if not, act impressed anyway. So what I'm going to be talking about today is junior miner investment strategies and opportunities. And I'd first like to discuss, well, first of all, some of you might know me from my article that I write in Kitco each week. It comes out every Friday. And if you don't, and you'd like to, you can see me after the show, and I'll put you on my email list, and you'll get it in your inbox every week. And that's that. So we'll go into the presentation now, and the first thing I'd like to talk about is my investment strategy of basically following the money, meaning what are the majors doing right now? And what they're doing is they're coming along and they're investing into junior developers, explorers, and also early stage exploration companies. But the reason why they're doing that is I'd like to go into what happened during the last bull market. During the last bull market, from 2008 to 2011, was when the gold price made a solid base of around $1,000. Shareholders of major global miners were clamoring for more ounces. We need more ounces. Look, gold's going to the moon. We got to have more ounces. So basically, the majors, what their strategy at the time was, let's invest into large deposits that are bulk tonnage, low grade, just to get ounces on the books. And this did two things. It did get ounces on the books, but they bought all those ounces with paper, and it bloated all their share structures. So when the bear market came along, we had institutional shorts come in. As soon as the $1,500 gold price lost its floor, institutional shorts came in and just decimated the sector. And all those deposits, those low-grade bulk tonnage deposits, are still on the books. They have had to write them down. So fast forward to today, and now they're like, okay, that didn't work. So now what we're going to do is we're going to go in and we're going to buy anywhere from 9 to 19.5% to 19.9% of developer explorers, and even some of them, even like Goldcorp and Agnico, they're coming in and they're buying chunks of early stage microcap exploration companies. So what I've been doing since mid 2016 is I'm following what these companies are doing and investing in the companies that they're investing in, and also kind of the Wayne Gretzky approach where you don't follow the puck, you follow where the puck is going. So you study these deals, and if you study these deals and see what they're investing in, apply it to what you're investing in, and then maybe you'll find some that they're going to come along and invest in. And to do that, you need to focus on district scale size land packages. That is key. If the junior doesn't have this, I'm not interested, because a major's not going to be interested. So also, who owns the stock is a big one, because if it's strong hands owning the stock, you don't have to worry about being sold that much by retail. How much does management own? That's a big one. And also, not only how much do they own, but how do they own it? Do they own it with their own money? Do they own it with options? You want to be on board with these management companies. You want them to be on board with you. Because if they're not going to believe in it, then why should you believe in it? Also pay very close attention to the fully diluted shares and the retail float, like I said earlier. Let's say you have an early stage exploration company and they're trading at about 10 cents and they've already got 200 million shares out. And they just did a private placement and you're like, okay, they just did a private placement, maybe they'll hit something, I'm going to get into this stock. Okay, this private placement is probably mostly retail. And what a lot of these retail guys do when they buy a private placement is they sell the shares immediately when they become free trading after 4 months and keep the warrants. So what you want to do is make sure that the company hits something within those 4 months. As if they don't, it's probably going to get hit pretty hard after these shares become free trading. And then they're going to have to come to market again at a low share price and dilute that share structure another 100 million, maybe another 50 million, whatever. And all of a sudden they're at 200, 250, 300 million and they haven't really found anything yet. So that is very, very important. And a big one for me is the first thing I do every morning when I turn on my computer is I look at insidertrading.com. And I look at what the top 10 buyers are on the venture and on the TSX. So if management has bought a bunch of shares, or somebody that is a well-known financier like Ross Beatty or somebody like that, if they're buying a bunch of shares, especially in the open market, that's a really good sign. That's a really good sign. And for me, I try to invest in no more of my investment capital of 2 to 3% in each junior, because as most of you know, these things are extremely risky. I mean, I don't care how good something looks like on paper. Well, this thing looks solid. You know, I'm going to put a lot of money into this. It can't go wrong. Those are usually the ones that do go wrong. So you just make sure to spread out your risk and mitigate it. It's very important. And this is a big one. Frank Holmes, I don't know if you caught his talk about the GDX and GDXJ, the rebalance and the quant theory of what's going on with that, but very, very important. If you own anything that's in the GDXJ, you probably you're probably not real happy right now. But if you don't own anything in the GDXJ and you do want to own it in the future, now's a good time to watch it, because these things are getting hit so hard because of Frank Holmes' quant theory and because of institutional shorts coming in and exploiting a situation. So that is happening technically on June 17th, but it looks like it's already happening to me already. So, but what is also happening is these companies that I discussed earlier about, the companies that the majors are coming in and taking blocks of shares in, those companies have been bifurcating from the market. A lot of them aren't in the GDXJ, and that's a huge point. I mean, if you take a lot of these companies that aren't in the GDXJ, which, well, let's face it, it's not a junior index. 55% of it before the rebalance was either mid-tiers or even GDX itself. They have 5% of GDX in the GDXJ. And just this past week, you had a redemption in GDX, a historic redemption on the day the Fed minutes came out on Wednesday. 660 million of outflows in GDXJ alone on one day. And in May alone, 5 billion in all the ETFs, all the gold ETFs combined have outflowed out of those ETFs. So what this is doing is it's creating an opportunity in the quality. There's not, as far as I'm concerned, there's not a lot of quality in GDXJ, but there are some quality juniors in there. So those are being affected. So if you take a look at those and do your due diligence and say to yourself, okay, I think this company is worth this, but it's trading at this. So once it gets to this price, I'm going to buy it. That's a good way to look at it, I think. So now, another strategy that's worked well for me is area plays. I was at the Beaver Creek conference in September of last year, and a Cisco gave a presentation, a Cisco Mining, and I'm sure most of you know the reputation of Cisco. They're very successful. They're very bright individuals. They've made a lot of money in this market in the past, and they got up on that stage and they said, we are going to concentrate all our energy on this windfall deposit. They had a lot of other deposits going on at the same time, and they said they're going to concentrate all their energy on this deposit, and they were going to. They believed that there was 5 million ounces there. Okay, and a management team like a Cisco they're not really hyperbolic about something like that. And lo and behold, 4 months later. I did an article on this in one of my pieces as well in early February. On February 6th, 3 companies that are exploring in that district that surround that property and are on trend from that windfall deposit raised money. And Cisco is in all of 2 of those companies. And there's also 2 of those companies here, and I'll bring up the companies at the end of the presentation, which I like, that are here. Some of them are in these area plays. And I'm not going to go on too much about them because I think you should go to the booth and look them in the eye and talk to them yourselves. But they're companies that I have all my money, I have my own money in. So I really believe in them and I believe in their stories. So as far as the Windfall District is concerned, there's a lot of action going on there. I mean, a 400,000 meter program they got going on. It's tying up all the labs there. I mean, what normally takes 2 to 3 weeks to get back, it's taken 8 weeks to get back now. I mean, a lot of them are running to Timmins to get their assays back. But what it's doing is it's creating a lot of buzz in the district, and I think it's buzz that's warranted, because what Windfall has done now with all their drilling they're doing is they're putting out a press release each week of high-grade near-surface gold. They keep stepping out towards these other properties there that other companies own. And just this past week they put out 2 press releases for drill results in 1 week. So the other district I'd like to talk about is the White Gold District in the Yukon. Some of you are probably familiar with this. Back in 2011, Kinross paid $139 million for the Underworld deposit there, and after they bought it, everybody pretty much forgot about it because the bear market came and nobody cared about exploration anymore. But first, I'd like to, before I go any farther on the district, it's got a fascinating story of how most of the gold was discovered there. A little over 20 years ago, a man named Sean Ryan, who was like a maverick trapper and mushroom picker, went there, and he just went there to pick mushrooms. And he had all this time in his hands in the winter because you can't do anything in the winter in the Yukon. So him and his wife and his 2 kids were living in a minor tin shack where temperatures get like minus 50 degrees. And he just sat there by a fire and read mining journals, old mining journals. And then when he figured he had enough knowledge, he started to go out prospecting. And long story short, he ended up having 35,000 claims, and there's billions of ounces of gold in all his claims. And he's ended up selling them to juniors and becoming a multimillionaire because of it. So he went from picking mushrooms to be a multimillionaire. I mean, that's a pretty awesome story. And so when Underworld bought that discovery, of course, that he discovered, then Kinross bought them out. Like I said, the bear market came, made everything dead for exploration companies. But fast forward to now, towards the middle of 2016, Kaminak was proving up that coffee deposit that was high grade, heap leachable gold, and Gold Corp came in and changed everything. Okay, we're going to give you $520 million. They just announced they're going to spend $350 million building a road, putting in all kinds of infrastructure and putting all kinds of money in the ground. So now, where once was 1 major, now there's 5. Okay, all the global major miners are there. You know, we got Newmont there, we got Agnico Eagle there, we've got Barrick there, we got Kinross there, we got Goldcorp there. And they've all done what I discussed earlier, besides what Goldcorp bought the coffee project outright. What they've done is they've come in and they bought chunks of these companies, like farm projects, you know, like they're the farm teams. And they're going to nurture these things. And you know, these shares aren't going to become free trading. You know, they didn't buy these things to get a double. You know, they bought these things because there's a chance that there's a lot more high-grade gold there. And there's one company here, White Gold Corporation, who's tied up the rest of Sean Ryan's claims. They own 30% of the district. And Kinross just came in and practically gave them what they paid $139 million for in 2011. And now they own 20%. So you have two majors that own 20% of White Gold Corp, and the share structure is awesome. It's like 60 million shares out. So they got it, and they're cashed up for 3 years for a 3-year drill program. So I highly recommend you go see them, their presentation in workshop 2 right after mine. And I'm starting to run out of time, so I'll go over the Northwest Territories District in Canada. There's a company here that I really like that I'll show on the screen afterwards, that they've tied up a huge district package all around Yellowknife. All the infrastructure's there. They don't need to build a camp. They got everything there, and the Giant and Con mines were there that produced 15 million ounces. They've got 40 kilometers of strike, like a 400-kilometer package, and really good share structure, and they've still got $5 million of a finance they did. They started trading on the potential of this, and they got a little too expensive, and the market now has come down to where it's a good entry point on the chart. Okay, here's the companies that are here that I'm personally invested in, and Terra X is the one in the Northwest Territories that I just spoke of. Sakova and Bonterra are both on trend from the Windfall deposit, and Sakova cashed up. They just got they have $3 million, and they have 2 really good deposits in the same area. One's on trend from Windfall, and another one's very close. Go talk to them about that. And Bonterra, which just gave their presentation next door about an hour ago. They've got 2 really good deposits. Excuse me, one on trend from Windfall. Kinross came in and bought, I think, 5%. Cisco owns 5%, I think, and Sprott owns a bunch. So they cashed them up with $20 million. So they have $20 million now. And White Gold Corp, you heard me speak of already. Western Copper and Gold is an optionality play that's also in the White Gold district. They were really intelligent about how they proved up their deposit with minimal dilution. They sold a 2.5% net smelter early on the project, which is huge. It's like the capex on the thing is $2.5 billion, but they still have $7 million cash, and they got a share structure of less than $100 million out, and I think the retail float's like 30%. And they're really good with their money. They know they don't need to spend any money. They're just waiting for the market to come to them. Gold Standard Ventures is on sale now because of what's happening with the GDXJ rebalance. They've got 2 majors in their stock. They got 50 million cash. You know, they're in one of the best places in the world to explore for gold. Cartier Resources is really under the radar. I just met with the CEO, and Agnico took 20% of them, and they're in the Val-d'Or area, and Cisco surrounds their properties, and they've got 15 million cash. And like I said, they're really under the radar. They have no IR. They haven't really promoted their company, but they are at the show. So I strongly recommend you talk to them as well. And Falco in the Royan-Noranda camp, they've tied up 70% of that district. And they've got a PEA, they have 5 million ounces, but it is kind of an optionality play at these prices, but it's got the Cisco machine behind it, and they've got 60 million cash. And Marathon Gold is in Newfoundland, and they have a very high-grade open pit deposit, one of the highest-grade open pit deposits owned by a junior. And now I'll just talk a little bit about my business that I started 2 months ago. I do not, as I said before, I don't I don't receive shares, I don't receive options, I don't receive money from any of the companies that I invest in or that I talk about in my Kitco articles. That gives me the freedom to say anything I want, which I like. And I give subscribers a 24-hour notice before I buy something. And I use both fundamental and technical analysis before I buy something. I study charts, I study companies. Sometimes I study companies for years before I buy them. I just did that with Gold Standard. I missed it, and I thought, well, there goes that. But now, with the GDXJ rebalance, it's come to a good place to buy it. So also, my service is, this is important, my service is capped at 200 subscribers, meaning we all get in, try to get in at the same time, at the same price. And I try to promote a team-based approach to it. Like, we're all in it to make money. We're all in it to be successful, and I feel I'm a good enough trader to make enough money trading and then get paid a little extra to try to teach other people to do the same thing. So with that, I actually have a minute and a half, I can't believe it, and here's my performance totals. And here's my price at the bottom, which I think is very reasonable considering what some other newsletters charge. And that's it. And I actually have a couple minutes for questions, if anybody has questions. And that's pretty much it. Thank you so much for coming, and enjoy the rest of the show.